We talk a lot on this show about the stock market, and increasingly in the last couple of weeks, we have paid more attention to what's happening over in the crypto market. Bitcoin now trading above 19,000, closing in on 20,000. The market cap is back at a record high. And joining us now to discuss all things crypto is Mike Novogratz. He is the founder and CEO of Galaxy Digital. Mike, it is great to have you on the show. And you said just a couple minutes ago in your tweet, kind of teasing this segment, it's been a quiet rally up to 19,170. What have you been thinking in the last couple of weeks? And why is this so much different than what we saw in 2017?
Well, listen, 2017 was a global speculative mania. And if you even look on like Google searches, we're nowhere near what 2017 looked like, right? It was driven by small retail investors. It was kind of the first people's revolution in lots of ways. It was the first global speculative mania we ever had. This rally is being driven by institutions slowly getting into the space, high net worth individuals, hedge funds, real institutions. You know, Bitcoin's become a macro asset to hedge against the debasement of fiat currency, both here in the US and abroad. And so that story has really taken hold. Bitcoin's always been valued as a social construct, very similar to gold, right? It's valuable because we say it's valuable. And as more and more credible participants get in, when Stan Druckenmiller says, I'm buying Bitcoin, I mean, Stan Druckenmiller is kind of God in the macro space. If there was a God, it'd be Stan. And so, you know, the credibility of the space just keeps growing. And we've hit this kind of inflection point where the network effects take over, you know, because if you're probably a Yahoo Finance watcher, you know, a younger generation, you know, Bitcoin is social money. And with PayPal and Square and, you know, all these apps where you can now buy and sell Bitcoin on it, it's just you're seeing the supply get sucked out. PayPal and Square alone are selling more Bitcoin than all the miners combined each day. And so there's just no supply.
Mike, it's interesting because you're talking about two different driving forces here. You're talking about institutions on the one hand, and then you're talking about a younger generation on the other hand. Institutions aren't necessarily fickle, but the younger generation can be. So I wonder going forward, what the risk is of another crash in Bitcoin. Are some of the elements you're talking about, will they insulate against the possibility of a crash? Or because it's a social construct, if people decide they don't want it anymore, couldn't it still have that kind of a dramatic decline?
You know, I think we're still going to have volatility in Bitcoin. It's not like you wave a magic wand and a 70 vol instrument goes to a 10 vol instrument. But the maturity process is happening, and institutions are longer hold periods, they're deeper pockets. And so we're seeing a transfer of coins from quicker hands, right? Why Bitcoin had so much volatility in the past is that most of the liquidity came on these Asian exchanges like Wobi and BitMEX and Binance that offer 50, 80, 100 to 1 leverage. And so there was these leverage buyers, almost gamblers, speculators, that created a ton of the liquidity. A lot of that stuff is being regulated away, and a lot of it is being replaced. A lot of those coins are being replaced by more institutional hands. And so I think we'll still have volatility. It's going to be less.
Mike, how much influence is PayPal having in this market? They're out there buying aggressively. They finally opened up their platform to Bitcoin. How much influence are they having now? But also, how could their buying in 2021 send Bitcoin? Where do you think their buying in 2021 could impact Bitcoin prices?
I think
PayPal's platform globally.
PayPal's having a huge influence, and it's having a huge influence in multiple ways. First of all, it was, I said before, it was the shot heard around the world. Every single financial institution said, oh, what are we doing? Every bank in New York and around the world said, what's our crypto plan? What's our Bitcoin plan? And, you know, PayPal's got 330 million accounts. Now it's got 330 million wallets. Bank of America has 0 wallets at this point. You know, Facebook's going to launch Novi relatively soon with 2.3 billion wallets or some giant number. And so you're seeing this transfer of the financial services industry from bank accounts to wallets. And I think that was the unique moment of PayPal where people said, uh-oh, we got to get going. And so mark my words, every single one of the banks from Goldman Sachs to Morgan Stanley, within 5 years has a major presence in and around crypto.
Jared Blickery here. I happen to be a long-term bull, but we've seen some incredible pullbacks, greater than 90% many times over the years. I'm just wondering, in this maybe new normal where we have a lot more institutional support, do you still see potential pullbacks like that that are so painful to go through?
Yeah, I think we're gonna have volatility. Right now, we're getting close to 20,000, like the old highs. Rarely does a market trade to the old highs and go right through it, right? It's just markets usually touch the old highs, exhaust themselves, correct a little bit, and then take out the high. And so there's big support around 14.5, 15,000. And so listen, 19,000 to 15,000 would feel pretty painful if you just bought it here at 19. I don't think we're going to get down below 12,000 again in this episode. Listen, if something dramatic changed, if Janet Yellen came in and said, we're going to arrest anyone who touches a Bitcoin, the regulatory risk is there. It's being diminished, and we're seeing regulators move the other direction. From the OCC saying banks can custody, crypto, all across the world, we're seeing this idea that the digitalization of money is happening. And so that architecture that you need for the Chinese stablecoin or the US stablecoin that will come out is the same architecture that Bitcoin and Ethereum, the rest of crypto trades on.
Mike, we started the conversation at, asking you why this is different than 2017. I'm curious what kind of conversations are like for you with your former colleagues in the hedge fund, the institutional space today versus what they may have been as recently as probably a year ago. I imagine things are different, or maybe these folks have been more seriously interested than perhaps it would seem just based on the price the last couple of years.
I think there has been a quiet group of people that have been focused on this, that have bought it in their personal accounts, but not in their institutions. And this is really the first year where people are like, okay, my hedge fund needs to be part of this. My asset management firm needs to be part of this. And so people are reaching out for advice. People are, we're getting some thumbs up, nice job, happy for you, but how do I get involved? The talent that's moving into the space is real. I think, we just hired, Damian Vanderveld, who was, a partner at Goldman Sachs for 6 years, and he's leaving Goldman Sachs to work at a crypto company. 4 years ago, you weren't getting partners at Goldman Sachs leaving their jobs to come here. And so I think you're going to see a lot of talent migrate into this space real quick.